I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here, nothing new on a swing basis. I day traded a few stocks successfully. We had, once again, a bunch of great call-outs in the VTF in the morning meeting that panned out pretty well. Talk about that in a second. All right, let's take a look at these Facebook numbers here. Scrolling up in the VTF. All right, so Q3 daily active users barely beats 1.93 billion, estimate of 1.92 billion. But Q3 monthly active users was a small miss. EPS beats, but sales misses. Revenue misses. Q3 ad revenue misses. Buyback, we'll get back to that in a second. And then I think this is the big one right here. Facebook sees Q4 revenue 31.5 billion to 34 billion. That's beneath the estimates. That whole range is, even the upper end of that range is beneath the estimate. So the only thing that seems to be holding this stock up right now is the buyback news. Facebook announces $50 billion boost in share buyback authorization. I mean, that's big. That's big. But these numbers, like I feel like stocks have been getting... Well, now I'm looking at the daily chart here on Facebook. I see Facebook is obviously kind of beaten up into this number. If Facebook was still at highs, if Facebook was at 380, I think, coming into these numbers that they just posted, I think that this thing would be getting absolutely massacred. But it's down off of it. So it usually means that you don't have to have the most phenomenal numbers in the world. And then they're patting themselves with that buyback a little bit, which is obviously great news. So we'll see. I think it's very hard to have conviction Facebook long off those numbers, though, but that buyback is huge. Anyway, those are my initial thoughts. We can reassess tomorrow. Market. Beast. SPY's here up 0.5%. Q's up a percentage point. Russell up a percentage point. We discussed in the morning meeting today the bullish continuation pattern that the market was starting to set up. The SPYs here are still a little bit extended, but they basically have chopped sideways for the last 3 days or so of last week, which has kind of created this little bull flag pattern. We time corrected a lot of the overboughtness of the market, because remember early last week, like Monday, Tuesday, we were getting readings of our sentiment indicators that were in the sell territory. We were looking at a stock that was extended based on how we view technical equilibrium, and then we chopped around for 3 days. We let this ADMA catch up, even more so in the Qs and more so in the IWM. The S&P was still a little bit extended. But this is a bullish pattern in a market that is at all-time highs. So a bull pattern in a market that's all-time highs as this ADMA is catching up to base. We get 0.5% of continuation today in the SPYs. Very nice. And that's what we spoke about in the morning meeting today was, you know, we're back at that point where you don't want to be putting on those upside extension shorts anymore. Let me turn my camera back on. We don't want to be putting on those upside extension hedging shorts anymore. We want to be erring to the side of the longs in this market once again because of how we've set up. It is a bull market. Ladies and gentlemen, it is a bull market. NASDAQ here, same thing. We discussed this 4-day time correction here in the Qs that settled the overboughtness from this huge up move. ADMA basically caught up to Friday's low, setting us up for upside continuation. NASDAQ, the Qs here above 374 is bullish. Russell overall has been relatively strong to the SPYs and Qs, I think, since mid-August. But we had a few days here when the SPYs and Qs started catching those big moves where the IWM underperformed, though doing so from basically bull territory. You know, I've been viewing 225 and above is what I call bull territory for the Russell. And then today we cleared higher. It's a good looking candle here from Friday, right? I mentioned this in the morning meeting. I like this little tail down into the ADMA here. So setting us up for upside continuation. There's no extension here. We cleared 228 resistance today. There's a little bit of resistance at 230 as well that we closed near. And then after 230, all you got is all-time highs for the IWM, which is like this 233, 234 area to look at. So once again, all three of our indices are looking very bullish. You want to be long this market. You don't want to be fighting shorts, but you also want to do it in a strategical way where the risk, reward, and probability of success is on your side, which means that when we have these degrees of high upside extension, we want to take our foot off the gas pedal a little bit, book some profit, see if the market timer price corrects, and then we can look for re-entries. And this time correction was just so bullish here in the market that it sets you up for continuation today. Speaking of extended markets, Tesla is probably the first thing I got to talk about. Oh my God, what a move. First of all, there are a few you guys here in the virtual trading floor, you know who you are, who did very well with this Tesla here for the month of October. So if you're one of those traders, congratulations. We called out multiple buy setups in this where you could still have stock. First of all, here at the end of September, on this wake-up ignition bar breakout day here through 760. Then we discussed about this ascending wedge here for continuation here on October 12th. And if you're in from either of those days and you're implementing the trailing rules that we discuss, just beautiful continuation. I think we even discussed actually 2 trading sessions ago also, Wednesday, coming in and buying after this 3-day rest with the ADMA catching up. It's the same thing. You know, extension, rest gives the setup, and then here's your next move. Now, the degree of this next move is nuts. Obviously, the stock got hit with some really good news here this morning. Hertz is coming in and buying 100,000 shares of their cars for their fleets. That's really bullish to see that type of adoption from a rental car company like Hertz. And this upside move here is sick. The bull option flow, which is one of the layers of probabilities that we pay attention to, hit all day today. I still think that buying it today was difficult because of the degree of the gap and the degree of the move that it had even coming into the gap. I really think that, you know, the ideal situation with Tesla is that you're just long from one of the days where it had a good responsible setup here. There's really 3 main days that we identified. September 24th, October 12th, and then last week on October 21st for technical buys for continuation. And if you're in from any of those days, then you're just reaping the rewards of good execution from previous days, and that's fantastic. That's definitely what we want to see. So yeah, congratulations to the Tesla bulls who caught this. At this point, I think your game plan's the same. You have a large degree of upside extension at this point on high volume, so it's a good idea if you have a core position to take some off into large degrees of extension when volume accelerates. But I think it's also a good idea to keep some. Keep some in your pocket to continue to ride this trend and ride this momentum. I mean, momentum can be a heck of a thing in markets. We know that, right? I mean, we just saw it in DWAC. This DWAC, for better or for worse, hardly even has a business plan yet. But momentum is a heck of a thing, and was able to get this thing to $175 yesterday. So, you know, markets can give really, really big moves in short periods of time, especially when the volume is there, the interest is there, and that's what's going on with this Tesla. So if you still have some from any of those days, trim and trail. That's how we maximize reward. We trim into extension, we trail for trend continuation. So congratulations. For today's trading session based on the morning meeting, we had a number of ideas, and again, a lot of those worked out really well. I actually want to start with CHPT. This was actually not, I forgot, I didn't bring this one up. I forgot to research this one on my own in my own personal morning research this morning. So I'm glad one of you guys brought it up in the morning meeting today. This is the third fantastic trade in 5 days. We called out CHPT on October 19th for this breakaway gap. Then it gave a rest day. That rest day then led to continuation. So 2 days ago on Wednesday, we called for continuation on the break of the inside day. 21.26 is your buy. Then what did it do? Gave another rest day yesterday. So what did we do? We called for continuation today above 21.90. So you took CHPT today through 21.90. Awesome stuff. You know, kind of sets up a little bit with a pattern into it. You can see it's trying to have a little bit of resistance and then just continues the trend throughout the day. So that is very nice. Material names. U.S. Steel was a call out for today. One of my ideas, we looked at CLF on Friday. Off the earnings report here on Friday, $22 we discussed going long, versus $22 area. I know for a couple people, the fact that they put in a low of $21.95 was a little bit tricky. But for those who caught it, gave a fantastic move, closed on highs. I know some of you guys swung it. Why wouldn't you swing it when you're $2 in the money on a $24 stock? This is exactly the type of thing that you would want to keep overnight for reward continuation, reward maximization, and lo and behold, great continuation CLF. But that led to the U.S. Steel idea, $23. Actually, maybe this wasn't my idea either. Now I think about it, I think maybe one of you guys brought this name up in the morning meeting. I love that. I love when you guys are bringing up the ideas that make the team money. $23 is a very clear, obvious resistance level. It gapped above it. This is a technical breakaway gap. So we want to do on a breakaway gap when the risk is feasible is basically buy the open versus the previous resistance. So you want to be long X versus 23 off the open, and then pretty soon after you could be raising your stop to the opening low, but probably not right away. And once again, another just beautiful trade here in a material name. We're bullish on these material names right now. We're bullish on these energy names. We're bullish on these value stocks. And this was just another great setup. Speaking of energy names, XLE and XOP and the energy stocks were on the radar today as well. The call out was initially XLE versus $58. I specifically was looking at ExxonMobil and Halliburton. Some of you guys brought up Oxy. I thought Oxy might have been a little bit more difficult because of the extension, but it also worked out really well. This XLE was actually difficult because it broke the opening low. So as you can see here, gap up above resistance. So if you can afford the risk, the initial stop loss, you want it to be 58. But once you're getting this continuation here, you can definitely raise your stop to opening lows. Opening lows, it tails through that here for the XLE. Not all the energy stocks did this, but XLE did. So if you got shaken out here, I think it's fine. I think you did the right thing. Hopefully you're able to cover your risk, and it's not a losing trade if you executed it well. You just got pushed out of something that could be decent. But overall, this XLE is looking phenomenal. Like 6 days of rest coming into today. So basically a bull flag and one of our most relatively strong sectors, looking for continuation off that flag today. And then off of that, you got like a stock like ExxonMobil, similar pattern here with the inside day. Initially could be long versus Friday's high. Pretty quickly you can be raising your stop to lows, bull flag continuation. Similar situation with the XLE. This pullback here is a little bit tough. If you're trailing tight, you might have gotten stopped out on this break. If you're trailing loose and giving some still to opening lows, you don't, and it closes on highs. So that's solid. Oxy, which is a name that I like in the sector a lot, but technically I thought might have been a little bit too extended. This actually turned out to be one of the best ones. Amazing opening drive here. The pullback at 12:30 with the XLE breaking lows was not nearly that deep here for Oxy as it was with a lot of the other stuff, and it still closed really well. So what else are we looking at kind of in that universe? Retail, Macy's. Macy's also turning into a tough one, though it never broke the opening low here, which is good. We identified this day here, October 18th, is a Maribozu candlestick. There was some news that day, big volume, building out a flag since then. ADMA is catching up with an inside day. I generally love this pattern. I love when they tighten up with the inside day right as the moving average catches up too, because it can give you clear execution signals. So you want to be buying this either through Friday's high or versus Friday's high. I think I mentioned if on a pure swing basis, you could give some maybe to Friday's low if you're trading on a little bit wider risk reward. Amazing opening volume and momentum here through that Friday high. I mean, you literally could have bought this through Friday's high and been in it for like 5 cents risk, which is sick. And then the pullback here was deep, definitely deeper than you would like, but it didn't break the opening low, so it's okay. And then it kind of builds out here and goes sideways for the rest of the day. And honestly, it probably didn't close well enough to swing, which is fine. You take your trade here, especially if you have that tight risk, you book your profit, you're assessing at the end of the day, and you say, you know what, daily candle is not closing great, my profit cushion on it is not great, so I'm going to close out of this one into the close because that's good risk management. And this is called putting yourself in the position to make money. You know, one of the only things that you can really do, one of the most important things to do as a trader in general, is to be putting yourself consistently in the position to make money. Let me just repeat that because my phone just distracted me a little bit. What we are seeking to do as professional traders is to consistently put ourselves in the position to make money. You're not necessarily, I know this almost sounds backwards, what we're not necessarily doing as professional traders is trying to be consistently profitable. What we're trying to do as professional traders is put in the process that leads to consistent profitability. So consistent profitability is a result of the process, right? So that's the goal. So when you look at any of these trades that we just discussed, it's about, you know, it's not so much about how well it worked or how well it didn't work. Like, you know, we had a host of ideas here for the morning meeting, and I didn't even talk about Mara, which was another one. And honestly, almost all of them worked to one degree or another, which I love that. Some of them worked fantastically well and, you know, like closed on highs, and it's a great picture. And some of them were, you know, like this Macy's, which closed in such a way where the risk reward probably doesn't justify keeping it overnight. You can't really know at 9:30 in 5 seconds which is going to be the one that works absolutely the best, which is going to be the one that rolls over. So all you can do as a trader is consistently put yourself in the position to make that money. Put yourself in the position to make money consistently, and then at the end of the day, when you're reviewing your results and you're reviewing what you did, you shouldn't just look at your P&L and say, oh, I made a lot of money, that's great. Oh, I lost money in this, that's bad. You say to yourself on every one of those trades, well, did I do the right thing here? Did I put myself in the position to make money consistently if I was doing it in the long run? And if the answer is yes to that question, and you had a strong game plan, you had your risk management in place, you did all that appropriately, then the results don't matter on any individual day. Some trades work, some trades don't. You know, lately as a team we've been on a run. I would give us a pat on the back. It's been like almost every day now for 2 weeks where like our morning meeting ideas have just been fire, and I love that. But again, it's about the process. Am I doing the right process? Am I implementing it consistently to be a consistently profitable trader? Big Z saying it's like a boxer ready to get hit. It's like a boxer getting ready to not get hit. All right, so it's great stuff today. Yeah, I mean, the only other one, you know, Mara, we called out as well here based off this daily chart. It was my favorite crypto play coming into today. So if anybody caught that off the open, that was a really solid one also. Obviously, you have all these insane stocks that I didn't mention in the afternoon here. I said we should be avoiding the CWAC today. It's just too extended. It's up too much. This fun as well. And then when they start like moving like 30 stocks off of the news of one, that's usually kind of a signal that they're spreading it too thin. Like the CRTD today, they did a Trump NFT, so they gap it up to $7. Like, that's just crazy. And Mark was another one, gapping this thing up just huge off of like nothing today and selling it all the way back down. I actually had an okay day trading this today. But anyway, that's all I got. And I am happy to take a look at anything that you guys got. So let's see here. Scrolling back up to 10 after 4 in the VTF. A lot of Facebook chat. Oh, BKKT. This was the sick one today, for sure. This was nuts. Yeah, I know a few guys caught this also today. So if you did, congratulations. Just guys, again, I can't emphasize this enough. Especially late into the moves, you got to be so careful with some of these stocks. There was, you know, some people definitely got damaged in this DWAC when this thing was in the, you know, mid 100s on Friday. You got to be so careful with these things after they've had these big runs, especially if they're just like a SPAC or something like that. This BKKT, I know someone tried to explain it in the VTF. I still don't even really know what this thing is. It's like some sort of crypto-related play, and they're running it after hours. Wow. Whew. Yeah, and again, I know you guys are calling this stuff out pre-market too, which is phenomenal. Where's Facebook trading right now? Yeah, Facebook's still trying to hold up. You'll hear 338. Buyback news, I think, was money, and the fact that it was beaten up into the earnings report, I think, is bullish for the stock as well. No after-market news, I don't think, on that BKKT, Big Z. Sometimes these low floaters, the same thing happened with that DWAC. When they have a big run like that during the day and they close well, Pat's the first one who pointed this out to me. They'll just keep running those things after hours when the market thins out even more. Mike asking about Goldman. Yeah, so Goldman got brought up this morning in the morning meeting. I don't love trading Goldman. It's a little bit expensive and thin compared to some of the other banks, but we know that this XLF has been phenomenal. And my issue with the XLF, actually, that made me not really have it on the radar this morning in the same way that I had the XLE on the radar, was just the move that it's had coming into today. So, like, what I liked about XLE was that it went sideways for 6 days here and then set up with this inside day for continuation. The problem with this XLF is that it's just been grinding higher here 1, 2, 3, 4, 5, 6, like 7 days in a row. And I mentioned this in the morning meeting. From my experience, financials are not momentum names. So, like, you should classify your stocks. Like, these different stocks have different personalities, and some of their personalities are similar to others. Like, when I'm looking at a real momentum stock, like any of those crazy names from that list that we have, like your Palantirs and your Skills and your Wishes, the 3D printing names, those types of stocks, those are momentum names. Those are the types of names I want to buy high to sell higher. Financials, from my experience trading, have not been that way since pre-financial crisis. So when I see the XLF up here and the ADMA, beneath it like this, and there's a degree of extension, that makes me not really want to be buying these. This is the type of sector that I prefer to buy a dip on as opposed to buying high in order to sell higher because the momentum usually doesn't come in. So this, to me, took most of the banks out of play. Bank of America looks just like the XLF. JP Morgan, I know someone asked about in the morning meeting. I didn't like it as a buy in that 172. I thought it was too extended. But Goldman, we mentioned, maybe wasn't quite as extended and maybe would still be buyable above this 415 area, and then 420 is another bigger resistance. So it just didn't go today. Let's look at the intraday price action. Yeah, it tried to go early. The opening volume here isn't bad, but once it breaks the opening low, you just got to get out of the way. And that's like a good rule, too, especially if the ADMA catches up to the opening low, which I see it didn't quite do it here. But if you get an opening momentum move, and this is a great general trading rule, if you see a momentum move in the market, and that market or that stock gives a retracement, a pullback that is in excess of 100% of the momentum move, the stock is done for the day. There is a very low probability when a stock gives an opening momentum move and then a 100% plus reversal of it, there's a very low probability of that stock making a new high. Granted, a little bit higher of a probability if the ADMA didn't catch up to that opening low yet, as what's happening here. But I think for Goldman, if it was on your radar here, maybe you take your opening trade and you're getting stopped out. And if you didn't take your opening trade, then you never get in it. This inside bar doesn't break up, so you don't get continuation of momentum. That could be a buy. And then if you're not already in it and you see that the opening low is broke, you would say to yourself, well, why do I want to be involved in this at all today? So I think the financials still look fine. I think Goldman still looks fine. I mentioned like a bigger swing position out if you wanted to. If you're a bigger risk-reward type of trader, you could give it down to 404.60. But that's a lot of risk here. And again, just to repeat myself, I think Goldman is one of the worst actively trading banks that you can have just because of its expense. Its liquidity is a little bit more difficult here. So it's still okay. It just needs time. And I think the XLF itself needs time because of the degree of extension that it has. So that's where we're at with Goldman. Next here from Chinggis. Can you please talk about the significance of inside day, which I hear a lot about, and how it translates into opportunity? Sure, I can talk about that a little bit. Chinggis, I think you also have access to a class. I have an entire class on inside bars and inside days. So I'm definitely going to recommend that you take a look at that because it's probably an hour-long class, and I'm not going to be able to get that into that much detail here in the meeting. But basically, you know, we can go back to CHPT or whatever. So basically, inside bars, it could be a 5-minute, a 15-minute, a daily. Inside candles are used for execution purposes when you like other things. So here's the first thing I would say to you, because this is important. When you're talking about inside candles, I promise wholeheartedly that if you buy the break of every inside candle on a 5-minute chart or even a daily chart that you can find, I wholeheartedly promise that you will lose money in the long run. So don't do it. We want to utilize inside candles as an execution strategy specifically for when we like other things, specifically for when there is trend or momentum. So, you know, I spoke about it, I think, a couple times already today. I love a chart where you have that big upside movement, creates that momentum move, then you get the one inside candle. An inside candle represents a period of rest. So you get that one inside candle, and then you get continuation. So you have your move, your rest, your move. A momentum move, a rest, and a momentum move. So that's how we can utilize inside bars when we have momentum. We can also utilize them when there's trend, right? So an uptrend is a pattern of higher highs and higher lows. So my stock is working its way higher. Every amateur trader always wants to be able to think that they can be good enough to sell every pivot high and rebuy every pivot low, and then sell the next higher high and rebuy the higher low, and think that they can be good enough to be able to do that for every stock on every time frame and be a bajillionaire. That's very difficult. But all the same, there can be some cues that we can look at that the pivot low setup is the actual pivot low setup for continuation. One of those is what we call like a continuation hammer. So your stock went up, it gets a little bit extended, it has a pullback into the equilibrium area between the 8 and 21 EMA, and you get that hammer tail, you know, the hammer candlestick, it's got a tail at the bottom. We call that a trend continuation hammer. You can buy that versus that low, assuming that that is the creation of the pivot point that's going to lead to further trend. Sometimes what you get that creates that pivot low is like a negative Maribozu, so a red candle into equilibrium, followed by an inside candle. That inside candle then breaks up, that then gets above the high of the negative Maribozu and continues the trend. So that is how we can utilize inside bars for momentum continuation or trend continuation. And again, Chinggis, I'm going to recommend that you check out that class. Sahil asking about OSTK. Yeah, OSTK, I think I mentioned it this morning. This is one of those stocks that I always want to be long, like in theory, and then in practice, like, it's been very difficult to trade, and I don't actually get long. 84 bucks was the resistance level. It was a little bit extended into it, but it can definitely be a momentum name. The stock can trade very thin for an $84 stock. And, you know, tried to break it today, but it closed, like, right on it. So, it's tough to analyze. Like, if this tail was a little bit bigger, I would say that this is pretty bad. It's a false breakout. If this tail was a little bit less, I would say, okay, this is great because, you know, it closed above the $84 resistance. It was a little bit extended, so that's why we got this tail, but it's not the end of the world. It kind of closed like right at it, like kind of like right in between those two worlds. So I think it looks okay. You really need to get a solid close above 84, and then we want to see this thing trade above today's absolute high of 86. But it looks good. And that reminds me of this path that we called out today as well. When you guys brought this path up today, I ended up just taking this as a day trade. When you guys brought up path breaking kind of 53, I think we spoke about, or when you guys brought it up, and I was like, oh, 53 is kind of a level, and this thing is finally looking good. And the reason your question about OSTK made me think about path is because these are both stocks that in theory I always want to be long, and in practice, like, I always struggle to be able to bite my teeth into it. And Path, I think, really gave you the opportunity today through $53. Great looking volume on this break. Closed at highs today. There was a 200,000 share offer somewhere on this thing, I think at 53.50 that you can see. Got smashed. Yeah, so Path is looking probably better right now, I think, than it's looked at any point since it actually IPO'd. So we can keep that on the radar. Felipe here trading Facebook like a maniac. I hope you're making money. I love to see it. Steve caught a nice ride in SE today. Okay, yeah, off lows here. I know you were talking about that, so good job on that one. Next thing I'm seeing here is from DJ. How much experience do you think a newer trader should have before buying at the open? And what about shorting stocks? I'm still not trading at the open, but I feel like I'm missing on some opportunities in the morning meeting because of it. I suppose I just have to accept that. Okay, sure. So, good question here, DJ. So for a newer trader like yourself, or newer traders in general, I've analyzed the statistics of a lot of traders over the years, and from my understanding, and I know this is true for myself, most experienced traders, their best trading time of the day is the open. Without a doubt, for me, my most profitable trades, my most profitable trading times, the first 30 minutes of the day, and honestly, my best trades usually are triggering in the first 10 minutes. I've looked at statistics for newer traders over the years, and have seen that typically newer traders actually don't do as well at the open, and typically newer traders have their best performance between 10 and 11 a.m. And I definitely understand the why behind this. The market at the open is hectic. It's the highest risk, highest reward time of the day. So if you're an experienced trader and you can take advantage of higher risk, higher reward situations, well, bam, there you go. The market's thinner and it's moving much faster. If you're not an experienced trader and you're trying to trade insanity that's occurring off the open and you don't really know what you're looking at, and the tape is like spellbinding to you, and you can't really read the chart yet because it's only the first bar of the day, and you don't know where you should use a stop loss, and you also have to be very fast. You can see how the open can be difficult and intimidating, but yet starting at 10 a.m., the market still is having good opening movements. You can kind of get a lot of those secondary type trades, those bull flag type trades, but things have slowed down a little bit where you can see your execution points and you can know where your stop loss should be and you can think about things a little bit more, but there's still enough movement where you can get paid. That's as opposed to the time of day from 11 a.m. to 2 p.m. where almost all of us lose money. And I've given this warning in meetings recently as well. I was looking at some statistics of the group, and I was like seeing these midday number statistics, and I had to get on here on the VTF and be like, guys, you guys need to take a chill pill here in the middle of the day. Like, you're just churning away your profits from the beginning of the day and in the middle of the day by doing too much. I'm not saying don't ever trade in the middle of the day. I'm saying you need to be very selective on your midday trading. There really has to be something very specific going on that has you excited, news that's coming out, or a stock that's showing a real particular amount of strength for some reason. Or otherwise, you don't really want to be initiating much new. I think I initiated my path position today midday. So like I was saying, it's not zero probability of ever putting a new trade on, but you need to be doing significantly less midday. So there's just kind of some general principles about it. Now to more answer your question about getting involved, when should I start getting involved in the open as a newer trader? Well, it's probably going to be a very individual question, kind of depending on your progress. But start small. Start with your small execution. And a lot of what we're doing sometimes at the open is we're giving like wider stops initially, especially if there's those gaps there, and then we are tightening those stops up to those opening lows. But again, it's the highest risk, highest reward time of the day, so you do want to learn to be able to trade it. Those opening breakouts, those breakaway gaps, like U.S. Steel today, things like that. Those are that's the best opportunity, is the hecticness of that open, and you got to learn to be able to take advantage of it. So start small, see the results, then build in further is what I would recommend. And whether, the right time for you is 2 months into your career, 5 months into your career, 9 months into your career, it's very difficult for me to say because it's probably going to be dependent upon the person and how the person's getting through the learning curve. And shorting stocks, which is the other part of your question, when can I start shorting stocks? Well, you can start doing that more or less right away, I think. A couple of things to realize. Shorting naturally exhibits more risk than buying. you also want to pay attention to the market environment. We're in a bull market environment across the board here for our indices. I don't want to be doing much, if any, short selling right now in this environment. You are inherently trading with a worse risk reward and a lower probability of success on short trades. Obviously, there's one-offs. If you shorted DWAC at 175 on Friday, congratulations. But that's a super, super hard insanity trade if you're shorting that in between those halts. So, you know, you got to be very, very selective on it. The easier money, without a doubt, really ever since the coronavirus low, with a little bit of an exception there in September, the easier money in this market has been to the long side, not the short side. That can change. It did change in September. And you even saw, you know, early last week, me putting short. I shorted Apple, right? I made money shorting Apple. Shorted TQQQ. I made money shorting TQQQ. But it was very specifically taking advantage of overbought conditions in the marketplace and doing it specifically because I also had a long portfolio on at the same time, recognizing the market was bullish. So got to be careful. Next here is from Jackie. Can you please explain what you saw on the path trade today? Sure. So, you know, always starting from the daily picture and then working my way to the small picture, even on a pure day trade. The big picture is where you take your cues from. So you can tell here that $53 is a very clear resistance level since this gap down on the volume picked up and the stock kind of broke. You know, look at these highs right here, like these kind of consistent 53 highs here for a period of time. Also, this stock has been very heavy on its moving averages, this 8 and 21 EMA, where it's really been failing at it consistently. So now today, when it's getting to 53, not only is it proven that it's finally cleared those moving averages, but it's clearing a resistance level on the daily chart. And it's after doing it with this little bit more of a bullish pattern here that's come in. Higher low here. You could argue this is a bullish consolidation to the moving averages. Now it's clearing those moving averages and going after resistance. On top of that, we saw option flow hit path today. Option flow, we know, is one of our layers of probability. Option flow gave the confirmation. On top of that, we saw volume in path today. Once again, volume is a layer of probability, and it leads to, you know, higher probability of success on your trades and wider ranges and all that good stuff. So when it got here to 53 bucks, my concern was that it was a little bit extended into 53. Second time testing it, a little bit extended into it, but I bought $53. That's the price I bought in this thing. My initial stop loss, I really felt I had to give it all the way to this Maribozu low here, which is 52.55, because this is kind of the wake-up candle into it, and you can tell, as you guys know, I really like using stop losses that are beneath the 80 MA. If you're using a stop loss that's above the 80 MA, there's a higher probability of a shakeout. That's my initial stop loss on it. I also mentioned I was getting in at light, again, because of the degree of extension on the small time frame. I also was getting in at light, honestly, because for me, I've got to do some portfolio management. I've got a lot of longs on right now. I've got a lot of long exposure. You guys all know I've been very heavy in that WE. It's eating up a lot of buying power for me. So, you know, whatever. Light buy here, 53, risking 45 cents in the trade, and then it gave great continuation. I was a little bit nervous about the 200K offer that was at 53.50, but they ended up smashing it, and it closed really well, and it was a good trade. So that was what I saw in path today. To answer your question, Jackie, based on the news so far, what do I think of BKKT? I honestly didn't follow this BKKT at all today. I don't know what any of the news is. I am behind on it. I saw here that Ryan posted an image on the update. Bach Holdings Trump amid cryptocurrency services partnership with Mastercard. Oh yeah, I did briefly read this here this morning. Yeah, I honestly was totally out of the loop on this BKKT. I don't want to give you an answer on that without doing more research. So, gotta do some more research. Steve asking me FCX for continuation, thoughts on materials in general. Yeah, we love materials right now. Steel, U.S. Steel, CLF, Cleveland Cliffs. I know FCX got brought up this morning too, even though I didn't go over here in the afternoon meeting. 39 bucks is the level on it. I know some of you guys were involved in this. It closed above 39. It looks good. Bullish consolidation pattern, setting up for continuation, breaking 39 bucks today. Value seems like it's back, at least for the moment. Honestly, everything seems like it's back, though. Value's going up. Tech's going up. Qs are ripping. IWM is ripping. Speculative stocks are ripping. These insane SPACs are ripping. Energy stocks are ripping. What's not ripping right now here in the second half of the month of October? This market quite a bit. We're at all-time highs. It's a bull market. It's getting a little wild. Next year from Marty. Hey, Derrick, Patrick, and the T3 crew. I love the intro. How do you think Elon Musk feels today? Yeah, I mean, I don't know. The guy is an interesting character for sure. I can't tell you how he feels, but I almost feel like he doesn't care about this. Like, I feel like he cares about this stuff and doesn't care about this stuff at the same time. Like, if you ever see him, like, actually react to it, he just shrugs and he's like, okay, cool. Like, if all of a sudden tomorrow Elon Musk was the first trillionaire, which has been, like, the chatter recently, I think he would just be like, oh, yeah, cool, I'm a trillionaire. I feel like I saw him get asked, like, one time, like, how does it feel to be the richest man in the world? And he was like, oh, like, good, I guess. Whatever. I gotta go back to work now. I mean, you know, while I, from a fundamental perspective, have never been particularly bullish on Tesla, it's been difficult to, you know, I've always had a tremendous amount of respect for the visionary of Elon Musk. The stuff he's doing is great. You know, the guy works his butt off. I respect that. And honestly, the Musk company that I want to own is SpaceX. Oh, when are we getting the SpaceX IPO? I ask you. When are we getting the SpaceX IPO? That's what I want. From my man Big Z, asking about AFRM. Big Z, what are you up? Trading all night out there in Guangzhou? AFRM looks great. I don't love this candle. This kind of reminds me of one of the other charts that we went over today. You know, is it good? Is it bad? Like, if this thing closed a little bit better today with a close above 160, they'd be like, oh, it looks good, whatever. It's a little bit extended. There's a bit of a tail here. If this thing closed a little weaker than this, they'd be like, oh, this is a false breakout. It's not good. But closing directly at 160, it's like, oh, man, I don't even know. Like, it's kind of hard to say. I mean, overall, this thing has been phenomenally bullish. You got in last Friday at 156. I don't love your price, to be honest. I think you still need to be giving it to, like, you know, 150 or so, like these lows, if not the 146 low. So I'd be a little bit nervous if I was you, to be honest, on this close, given your price. But, you know, whatever, it's a bull market. So I would say just stick with the risk at this point. You're already in it. You swung it from Friday. Stick with the risk and see if the bull market can continue and everything across the board here and keep getting paid. Yeah. From Sebastian here, can I take a look at PayPal? Yeah, what did that PayPal do today? Oh, they sold it back off. What did Pins do? Did it get bid back up on... I heard there was Microsoft chatter. Looks like these guys are just trying to sell. That Pins did hold support, though. Had news, and I thought it was good above 54, but failed big time. Yeah, you know, somebody was asking me about this PayPal in the morning meeting today, like, well, shouldn't it just be back at 273 if they negated the news? And I said no. Because you don't know what this thing would have done had that news never came out, right? Like, it had a nice bounce here, but maybe it would just get failed off this bounce no matter what, and would be working its way back down to this 255 area. So I am surprised at the degree to which this bounce back failed. I would have expected this to hold up a little bit more, but I personally did not love the buy into this 255. I mean, it is still technical resistance. Right, it is technical resistance. This is where the support was. It broke down. So you always want to see if your previous technical support is going to hold as future resistance. That's exactly what happened, especially as you're getting back into the ADMA. So I think that your buy here, you're buying into the ADMA on a big gap up into a potential resistance zone. I think that buy is very difficult. I understand it. You know, again, thinking... You know, this thing was at 273 prior to the news. Even if it's not worth 273, I could probably get $5 out of this. But is the risk reward worth it? If you think you could get a move to 260, if that's what you're looking for, and you're buying 254, 255, I would argue no. So yeah, we went over that one in the morning meeting because someone asked about it also. I really did not love the idea of buying PayPal off of that this morning for those particular reasons. Scrolling down here. What did Mastercard actually do today? Nothing. Nothing. Adrian, would you say energy and basic material names like Oxy or AA aren't considered momentum names? It's better to buy on dips or support or on consolidations. Yes, Adrian, I would say that. I get nervous to buy any of those types of energy material names every time they have any degree of extension. I always want a setup like what we had in the XLE today, or a setup like what we had in CLF on Friday, or a setup like what we had in US Steel today, to get involved in those. And it doesn't mean that I'll never buy high, right? Like if you bought US Steel today, you were buying high, you were buying a breakout, but you weren't buying, it wasn't extended. You were buying a breakaway gap in US Steel today, but there was no extension here. You know, your ADMA is at 2280 and the level's 23. There's no extension off the open here in US Steel. But yeah, generally those types of names, financials, those types of stocks, energy, anything value is usually not where you're going to see momentum. But the other thing that we got to keep in mind, and I mentioned this in the morning meeting, stocks change. So I could be sitting here saying to you guys, hey, don't chase energy stocks, don't chase financials. But, you know, interest rates change, the market environment changes. Maybe as interest rates, you know, continue to move higher, then maybe those stocks change their personalities and do become momentum names. But I could tell you that they really haven't been for any point in my career. So I need the market to prove to me that they've changed. I'm not just betting on the fact that they have. Shane asking about Starbucks. Yeah, somebody asked about Starbucks in the morning meeting as well, and I didn't love it. I just think that the Starbucks is so much slop here for a trade through 115. It definitely looks better that it's gotten above 114. It's holding above 115, above 114. This candle today I think is okay, but I don't see anything in here to bite onto for a long that gets me really excited. I guess there's a little bit of resistance at 115, but again, I'm just seeing a lot of slop here, and I don't know. I don't really have a particular bullish thesis on Starbucks. I don't have any thesis on Starbucks at all, honestly, either technically or fundamentally. So I'm sorry I don't got too much for you there on that one. Richard. Brian says I met him once. I think he's referring to Elon. Here in Montana, he's an eccentric dude, and his intelligence levels are stratospherically above anyone I've ever talked to. Yeah, I can see that too. I get the feeling he's one of those types that doesn't really care about the stock thing. Yeah, me too. It's almost like he gets entertainment out of it more than anything else. Like the 420 funding secured. I mean, you could definitely make the argument that the SEC should have kicked him out a long time ago. But they haven't, and he definitely does have a degree of genius in there. But, you know, whatever. And honestly, he going back to Richard Giles' point there about Shiba Coin, I mean, what he did when he came in with Tesla and had them buy Bitcoin and then sold it and then said he doesn't like it anymore, that was 100% market manipulation to pad an earnings report where he knew he was going to miss. But they don't go after him for any of that stuff, and it is what it is. So Tesla's at all-time highs. Your comments from Steve here. Your comments a few weeks back about trying to get at least 400 shares, even for new traders, assuming that you can handle the losses related to proper stops, has been really helpful. Awesome. Yeah, you know, just from a game planning perspective, having more stock is better than less stock. You know, if I take the same trade as someone with a small account, and it works out a little bit on a percentage basis, I will almost always be more profitable than that trader because I was able to have more tier. And it just is what it is. Like it just is what it is. If you're a trader who works with a bigger account than a trader who works on a smaller account, the trader with the bigger account, there's an advantage that comes with that. And again, it just is what it is. But it doesn't mean that you can't be successful and grow and learn even on a smaller account, and doesn't mean that if you do the right things that you can't build that smaller account into a bigger account over time. I personally started with T3 in 2010 with a small account, and I didn't have a lot of money, and now the P&L swings that I've been having on a day-to-day basis, I mean, especially, you know, like last week and this week with DWAC and with WeWork, you know, these P&L swings have pretty much been in the six figures, and when I was a new trader, I couldn't even imagine those numbers. I remember the first time I lost $750 trading when I was a brand new trader, and I wanted to curl up in a ball and die. And, you know, these years later, the numbers just get bigger and bigger and bigger. So, yeah, you know, traders with bigger accounts, there's an advantage to that. But if you're a smaller trader, it doesn't mean that you can't build into it over time. I love Montana. I'm loving the Montana chatter out here. Wish I was out there with you guys. Yeah, I agree, Steve. Yeah, for sure, Mike. It definitely did for a period of time. I don't know where it is now. Yeah, Brian, I definitely want to get to Bridger this year, man. It's on the list. And I got sent. I won a so stupid. I don't want to get on a tangent here. I won like a ski package thing where they were going to send me a gift, but it could be anything from basically garbage to brand new skis. And of course, they basically sent me a face mask and some stickers. But one of the stickers was a Bridger Bowl sticker. I was like, oh, this is faded. I got to get out there to Bridger now and hit it. And I even bought that avalanche beacon to be able to hit that one lift with you, but I didn't make it up there. We'll see when I get out to Wyoming, Idaho this year for ski season. It's looking like January to February. I won't be able to get out there. I'll be an East Coast skier for at least the beginning of the season. Ski season starts November 22nd, I think. Oh, this reminds me, now that I'm at the end of the meeting here and going on tangents, I am out on Thursday and Friday this week. Heck of timing considering what companies are reporting earnings on Thursday. We'll probably still be trading them from a laptop, but I go down to Virginia Beach once a year. It's actually usually earlier in October that they had to postpone it this year, COVID-related stuff. But I go down to Virginia Beach for a long weekend every October for a big martial arts seminar. And this year it got postponed a little bit, so it's unfortunately this week. So I'm driving down to Virginia Beach early Thursday morning. So you guys are going to be in luck to have Patrick running the morning and afternoon meeting on Thursday, Friday, and possibly the afternoon meeting on Wednesday also. We'll see. From Richard here, do you do any Brazilian Jiu-Jitsu? NYC has some killer gyms. Yeah, I specialize in stand-up fighting. I was at one point I was the best kickboxer in the world for my weight class. But I've always had a desire to be what I call a complete martial artist. And that would include, being able to do everything from traditional forms to ground fighting. So, I've done a decent amount of BJJ over the years. As far as New York City goes, particularly Fabio Clemente, his gym. That's always been in the Union Square, East Village type area. Is definitely really solid. Do I like Wing Chun? Sure. Ip Man's a sick movie and it's the basis of Bruce Lee's martial arts. I can do a little bit of Wing Chun also. I can do like at least a little bit of like basically every martial art if you bring it up, including Wing Chun. All right, gang. I think we covered it all for today. It's after 5 o'clock. Just another really good day for the team here. Really good call-outs, really good teamwork. So everyone keep learning. Everyone keep working on your trades and being profitable. And I'm just loving the teamwork recently and the call-outs. I'll see everybody tomorrow morning.